Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Tuesday, and it's October 18th. We got just a couple items here on the economic calendar here, and we'll start off with the Consumer Price Index, also known as CPI. This is the inflation data that we kind of use, that along with PCE. That are the two main consumer inflationary data we use. PCE is actually the favorite of the Fed to use, but this is also an important one to gauge of inflation here. So back in August, we had a 0.2% increase in the Consumer Price Index, or CPI. Forecast supposed to go up to 0.3%, and it did go up to 0.3%, so it came in that forecast here. But when you strip out the food and energy, this is really what the Fed looks at. We get what they call the core, because the food and energy, when you put those numbers in there, it creates a lot more volatility. Now, CPI went up mostly because housing costs and gasoline prices went up over the past month. That's why you're seeing a bit more of a jump there. Now, back in August, we had a 0.3% increase, and the forecast was supposed to be at 0.2%, and it came in at 0.1%. This time around. So core CPI actually went from year over year at 2.3% down to 2.2%. So the year over year dropped a little bit by 0.1%. This is something we're going to want to keep an eye on, as inflation does seem to be picking up a bit more as we go ahead. Europe is starting to see it. You're starting to see it in Asia as well. If the Fed keeps with the rates low, this could again bring us out to what we experienced back in the 70s and 80s, which led to us forcing ourselves into a basically almost a decade-long recession, because they'll have nothing in their toolbox to fight inflation, and the main thing that they fight inflation is raising interest rates. All right, now let's go on to the next one here. We got the Home Builders Index, which is basically the confidence level of home builders out there. As you can see, back in September we had a 65, and it dropped a little bit in October. So they're not feeling as comfortable in October as they were in September. Right now, headline news. We had a stock market is actually up. Sorry, I made a mistake that I put earnings. Stock market's up right now. A lot of it is taking its earnings reports, like Netflix, Johnson & Johnson, Goldman Sachs, all reported better than expected earnings reports. So the stock market is kind of using most of its luster on the earnings reports today. Today we're doing all right here in the bond market too. So for the bond market, we took another step upwards. Now, if you guys have interest rates going out there floating around, if it's something you need to close in the immediate term, you might want to start considering locking here very soon. As you can see, we got the 10-day moving average. We touched upon it earlier today. We pulled back a little bit. Right now, we're up about 13 basis points from where we left off yesterday. That does give us an improvement, but to get above this might be a little bit more difficult. We may not see the better rates until after the Fed hopefully raises rates in December. So once we get that rate hike, then we might see a spike, or at least an improvement in our interest rates or long-term rates here. Short-term rates go up there, and that's primarily because it's fighting inflation when they raise rates, and the biggest enemy to bonds is inflation. So when the Fed's doing something against inflation, that helps out the bond market, and you'll see the bond market rally a little bit as a result of that. So if in the immediate term, if you're looking to like refinancing or something like that, or if you have interest rates you're floating some loans out there, you might want to consider locking in now, as this might be a point of this could push us down further again. As you see the 10-day moving average pushing down, at some point it's going to reach crossroads with the floor here, and it's going to push us one way or the other, and it could easily push us down a little bit further. All right, folks, just be careful. We do got some volatility out there. You guys have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. And if you guys want to get continued updates throughout the day, just go ahead and check me out on Twitter at Mike Bjork, and there you'll get the updated updates of the economic news throughout the day. Have a great day. Bye-bye.